The Dow Jones and S&P 500 turning positive Wednesday after the Federal Reserve released its policy statement. For more on that, let's go to Santa Monica, California, where we're joined by Ross Gerber. He's back in his office, CEO of Gerber Kawasaki. Welcome back, Ross. Now, the Fed didn't change rates as expected, but it did give its economic forecast, projecting that a 6.5% decline for the GDP and unemployment at 9.3%. What's your assessment of the Fed's assessment of the economy?
Well, I think Powell's been doing this really well, and he's been dead right about the right things that needed to be done. And that's why the markets are back. And so far, we haven't seen, we've seen a lot of economic damage, but I think it could have been worse even. So I think Powell deserves an A+ right now. The only thing I'm concerned about now is he's stoking so much liquidity that we're now seeing rampant speculation in the stock market, and that's now. So with him saying he's not going to raise rates maybe like ever again, like I'm concerned about the speculation that I'm already seeing and what's that going to be in the next 6 months. So I think this is going to be an interesting balancing act in doing what's best for the economy, but also not creating any bubbles that could be detrimental to the economy down the line.
But for investors, does this mean that still all lights are go, given that he's pumping in the liquidity, continue to pump in the liquidity that they've been counting on? He says he'll continue those bond purchases at current levels.
Well, no, I think as an investor, I think one should be very concerned about what he's saying. A 9% unemployment rate and a minus 6.5% GDP isn't usually the world that I'm aggressively buying equities. So what we've done at my firm is we've taken the most conservative position I've ever taken in my entire history in the stock market. What that means is our allocation is about 50% in stocks and 50% in bonds, cash, and gold. And with that allocation, the 50% in stocks is very concentrated in more aggressive investments, and that's helped us outperform. But from an overall allocation, I am warning investors now, okay? The optimism is at a high. We have a very difficult 4 to 6 months in front of us with an election, seasonably weak things, and an increase in coronavirus cases, and all kinds of challenges in front of us, and reduced earnings going forward and growth. So investors need to be careful. Please do not buy in to the speculation and many of what I consider irresponsible people touting investments that will cause tremendous losses for people over time. Remember Bitcoin, okay? So
right.
Please.
And you have been cautious, Ross. I'm sure you're probably unnerved by that speculative trading we're seeing by individuals, whether it's Chesapeake.
I'm not unnerved. I'm taking advantage of those people. I'll be honest. I'm giving them my very expensive stock, and they can hold it on the way down.
All right. The Chesapeakes and the J.C. Penney's and the Hertz's, I'm sure.
Well, we don't touch those. That's what's concerning.
All right. And lastly, Tesla shares, your favorite stock for you to talk about, above $1,000 today after Elon Musk telling the staff to bring the semi-commercial production truck to full production. But it's already well beyond its February peak, probably $90 beyond that. Do you continue to hold Tesla stock at these levels? Is there more room, or is there more room to run?
Well, keep in mind, we're long-term holders of Tesla, so we are not selling our Tesla. We have a large position that we accumulated over the last, 6, 7 years, 8 years, and especially last year. We've taken, again, we're taking a little bit of profit in here. Please, everybody, don't freak out. But we have to be prudent managers. And Tesla's a very expensive stock, but for a good reason. But I think investors should, once again, pause and be intelligent and wait for a better opportunity to get into the markets. We see a lot of speculation and in Tesla as well.
All right. So pause for now. All right. Thanks a lot.
Yeah, just be smart. When everybody gets so excited and everybody's all of a sudden a genius in the stock market. I mean, there's even one guy saying Warren Buffett's an idiot, and I'm like, you've got to sell when you see these things. These are obvious things, signs,
Like the shoeshine guy telling you to buy.
Yeah, please be safe.
All right, thanks a lot. In more ways than one. Thanks a lot,
Call
Ross.
an advisor like me, please.
All right, you're always the advisor. All right, thanks to Ross Gerber of Gerber Kawasaki in Santa Monica. I'm Fred Katayama in New York. This is Reuters.